Hmm. Hello, everybody. Welcome to the Thursday live stream. So just like the title and thumbnail suggest, today is just one of those days where we're seeing quite of a tumble in the markets. And the question, of course, always is why? Why is it happening right now? Well, the easy answer always is, of course, it's manipulation. It's the whales are manipulating. The institutions are manipulating. Everybody's manipulating. And of course, it all falls down on me, the small retail investor that's getting screwed over. And actually, this was actually sent to me by a subscriber over on X. And they actually asked ChatGPT, is the crypto market manipulated? And of course, ChatGPT, well, not of course, but they say yes. Based on extensive evidence from academic studies, regulatory reports, and on-chain data, the crypto market is indeed manipulated to varying degrees by big players. Now, the question then is, well, how much is it manipulated? Is it manipulated to where you move the price 1%, 10%, 50%, or what actually it is? And of course, there's always going to be the recommendation that it doesn't really matter what's going on in the background. It's because that's the narrative or the price, or the narrative, excuse me, follows the price. And it has nothing to do with anything. So you can take all these things into consideration and you can take a look at it. And we're going to take a look at one pretty important thing that's going on. But I have to tell you, as I've been in this market or many markets and businesses over the years, really just comes down to patience, waiting, and not really doing too much. I know people will tell you like, no, you got to do this and you got to protect this and your downside, and you got to move here and there. And most of the investments that I've done pretty great by me just sticking around and not really listening to too much of the noise, trying to find the signal that's out there. Of course, you're welcome to do whatever you want to do. And I got to tell you, I think we're really due for more of a tumble than what we are in here. So it's up to you what you want to do. But I'm just telling you, these are the things that I see. Now, we can take a look at the market. Man, 98,000. Congratulations, everybody. I thought it was at 99. But of course, we're going down even much lower than that. And that's just in the Bitcoin price. And of course, in the altcoin markets, it's even more of a bloodbath. Ethereum is down 7% in 24 hours. BNB 4, Solana 7. Anybody down 10? Guy here going once, going twice. 10%, 10%. And oh, well, that's good. Nobody's actually, I take that back. Canton, whatever the heck that is, down 16%. And of course, we take a look at the support bands. We are way below the bull market support band. It is supposed to be at 103,000. We're at 98,000 and falling fast. And of course, we talked about this yesterday, the death cross. We haven't even gotten to the death cross yet, but usually when the death cross hits, that's when we see a local low. And then also, we were very jazzed yesterday as we did a live stream and talked about how this was the second biggest inflow for ETFs for Bitcoin. That was on the 11th of November, because we were talking about this the 12th. And then the data from yesterday comes back, and guess what? We had one of the highest selling of ETFs at 278 million. Now, of course, we can take a look back. 7th of November was brutal, 558, 566, 186. But some of these days, as far as 278, what a reversal to go from a massive inflow to a pretty big outflow. But of course, if we take a look at this as far as cumulative flow, we're still doing pretty good, which is a difficult thing to do when you see everything just kind of decreasing. And that is not just our market. That's the S&P 500. Now take a look at this. And this is only going down farther. I think it's, I think we got one more hour to go in trading. It's 3:30 Eastern time. And you can see that things are not looking too good. I mean, 1.69% is like the most awful thing of all time. So why is it? It's this. It's Fed rate cuts, and it's the possibility of economic malfeasance that happened because of the government shutdown. So this is the first thing. First of all, I thought, and a lot of people thought, that we'd see a big, fat 25 basis point cut, which isn't that big of a deal coming up on the December 1st meeting, or 10th of December, I should say, excuse me. And that was over 80%. Now, over the last 3 or 4 days, we've had a reduction, and it's pretty much a 50-50 split. Right now, we're at 375 to 400, and there's about a 50% chance that's going to happen, a 50% that it could drop down, and they could do it 25 basis points. But it looks like, and we can even take a look at Polymarket, they're the same way. They got a 46% no change chance and a 53%. So why? What happened here? And why is it now a 50-50 split? Because it's kind of odd that we've got some data coming in. This is from Kobeshi letter. U.S. private employers cut an average of 11,000 jobs per week over the last 4 weeks. So usually when you have a reduction in jobs, that signals to the Fed there is something going on. Monetary policy a little too tight. You need to loosen up. You need to cut those rates so that the businesses can make loans, they can grow their businesses, and they can hire more people. But that's not the case. This is a 4-week total of 45,000, which is the second largest drop since 2020. But yet, we're still talking about keeping rates the same. Why is that? Well, here's one reason. It's because they said it. In recent days, Fed officials have sounded splits regarding interest and other rate reduction. Fed Governors Lisa Cook, Philip Jefferson, as well as regional presidents Alberto Musalem and Austin Goolsbee have sounded a cautious tone, indicating that they may be more inclined to vote for a pause in rate cuts. A pause. Additionally, Boston Fed President Susan Collins and KC Fed President Jeffrey Schmidt have made comments that indicate they would be highly likely to vote for a pause. Collins even said, "I see several reasons to have a relatively high bar for additional easing in the near term," meaning we're not cutting squat. And if you're going to price it in, you're in for a rude awakening on December 10th when we just say we're not doing a thing and we're not cutting and we don't care of some of the data because we haven't gotten the data because of government shutdown. And that's just how it's going to be. So if you take a look at that, you're like, manipulation. That's what it obviously is. There's only one reason for that. It's manipulation. It's whales doing everything. And of course, Jerome Powell probably sabotaging things politically in the background. But wait, there actually is a pretty good reason. So I had to ask ChatGPT what they thought, because what I love about ChatGPT and Grok is it can pull a lot of information from a lot of different sources, and it's not so biased. And I asked ChatGPT this. I said, here's the prompt. You're the premier macroeconomic expert with vast resources at your fingertips. You have all the data that central banks have, and you have access and the ability to take into account outside factors that the Federal Reserve doesn't look at. Based on your vast amount of information, what would you say? And with all the data, because if you think about it, really, like, you would think that AI at some point would just take over the Fed. Maybe we don't end the Fed. Maybe we just give more power to artificial intelligence and then back it up by overseers that would be people. And even ChatGPT says, you know what I'd do? I'd hold. And here's why. And I was kind of blown away. I'm like, I thought you would cut. I thought you'd be on my side, Chat. And no. Chat's like, we should definitely hold. So the case is, you could justify a December cut if you prioritize the job side heavily, which is what we do here. I look at jobs and I'm like, hey, people got to work. Open this up, cut the rates, let businesses pile in, and we can get some more people that actually can work and get a paycheck and be productive in the society. That's one side. So you could justify it if you're talking about labor, risk is rising, shutdown damage, and re-rate's still positive. But here's the case that Chat says, and this is their side. There's 5 pieces. It makes sense. Inflation progress has stalled just above the target. The target has always been 2%. The core PCE stuck around 2.9% for months. CPI at 3%. That's okay, but not mission accomplished. It does say we just had 2 back-to-back cuts. I don't think this is a big thing, but this is something that is heavily weighted in their decision, I suppose. The shutdown. The shutdown is a noisy, temporary shock. Also, this is something that is going on behind the scenes. When the government shut down, I was like, I don't really see a difference. But then over the last 6 weeks, I'm like, yeah, okay, I do see a difference here. And one of the problems here is economic damage from the shutdown. So blame your party that you hate the most, because they're both responsible. But here's the economic damage. The shutdown has prevented the government from releasing an array of economic data, forcing investors in the Federal Reserve to operate in the dark as they try to assess the world's largest economy. White House economic advisor Kevin Hassett said data on the unemployment rate for October may never be available. Well, good news, if you just come over here, Kobeisha letter, it'll tell you right here, we lost 45,000 jobs. So just saying, chop, chop, maybe you should be cutting those rates. But that's not what it's saying. Congressional Budget Office estimated it would delay roughly $50 billion in spending and it's going to lower the U.S. GDP by 1.5 percentage points. Remember, 2 quarters of declining GDP is one of the definitions that they loosely say for recession. So if you lose 1.5 percentage points, kind of a big deal. The CBO said the economy will largely bounce back when the shutdown ends, but that's going to take time. Though up to $14 billion of lost activity will not be recovered. And on the cherry on top, the SBA here in the United States, or the Small Business Administration, of the shutdown delayed $5.3 billion worth of loans to 10,000 small businesses, which is the backbone of the economy for the United States. So great job, Republicans and Democrats. You suck. All right, not political. I know I'll get a comment, but whatever. Lastly, the Fed's credibility is the scarcest asset. I don't really care about the Fed's credibility. It's not the greatest. But it says that, like, if they keep cutting, then it looks like they are puppets in the back pocket of a presidential. Debatable. And lastly, market expectations are already easing friendly. So gold and rate markets are clearly leaning towards more cuts over the next year. Another sure, here's December 2, which will add fuel to the narrative. So my reaction looked like hold at 3.75 to 4% and don't cut rates. I don't make the rules. That's just what ChatGPT tells me. So interesting enough. And lastly, before we get into the little Q&A, just remember that there are good things out there happening with Bitcoin and the crypto market at large. This is from the Bitcoin historian. I think this is at the Bitcoin Amsterdam. Luxembourg finance minister just said he is confident other countries will follow them and buy Bitcoin. I believe that, and CZ actually chimed in and said Luxembourg already converted 1% of sovereign wealth fund into Bitcoin, which, hey, it's something. Luxembourg doing good things. And let's see if other sovereign nations will follow their lead. So that's one good thing. But that just happened like a month ago. That wasn't anything recent. So congratulations to Luxembourg. Hope it works out for you. Probably will. And then also, Czech National Bank is launching a 1 million pilot featuring Bitcoin, stablecoin, and a tokenized deposit just to see how things go. So we'll see how that works out. So there is some positive things, but in conclusion, I will just say this. If those rates, we start to see more declining possibilities of them getting cut, the markets will respond. It will be negative. So if it's you, and you can only decide what's best for you. If you need to take some profits off the table, maybe this is a good time to do it. I'm not telling you what to do. I'm not a financial advisor. This is just things that I see. And that's it for today. So look, if you like today's video, give it a thumbs up. Consider subscribing. We talk about is heavily time sensitive. That's it for this one. Now let's get into the Q&A, and I'll answer your questions, and I'll have some questions for you guys. All right. Michael says, buy the dip when others run. I got to tell you, I'm tired of buying dips. I just have set it up as automatic on Kraken, and I just buy every day now. I don't really care anymore. And I'm actually thinking of shifting and putting everything into Bitcoin. Not my altcoins, that's what I'm saying. Just converting everything of dollars from my bank account into Bitcoin and just trying to live off that. Matter of fact, today I'm going to go and test out Square and the Cash App, a couple of local places here. I'm going to buy some things using Bitcoin and see how that goes out. Because all these things that are going on, they're only temporary. I'm not really too massively concerned about 25 or 50 basis points when I think what's going to happen as time goes on. But like I said, like in the short term, if you're like, I need some funds, I am homeless. I'm just watching Rob on my mobile phone, hoping I can get an apartment. You should sell, get a place to live, that type of thing. Or you got some massive bills, pay a little bit if you could. But again, it's only what's best for you. Melvin says it's all rigged, and that's the thing, because like when we were talking about, is the whole market rigged? All markets are rigged. All commodities, all equities, even the real estate market is rigged. I don't know if you realize that, but yeah, it's very simple. There was a great article about BlackRock buying up massive amounts of properties, and what they do is they essentially go into different areas. They'll buy a property, and then they'll undercut the price massively, which will bring all the rest of the houses around it down, and then they'll just buy up those houses. It's like, how do you win against a $12 trillion asset under management place? Because they manipulate markets. Now, I'm not saying they do it all over the place. That's all they ever do. I'm just saying this is just one instance of stories that I've heard and read about. And then, of course, here in the markets, it seems like when we get some kind of negative thing, like the rate cut, right? You might have a big whale start selling, and like, okay, see, it's not because of me, it's because of this thing that's going on over here, and then they buy as it goes even lower. I don't even want to wrap my brain around it. I don't want to try to time things. I'm not that good at it. So I just say, you guys can play your games as much as you want to. That's cool. I'll be here for the long haul. And when everything starts to go up, then I will dump on you. Or excuse me, I will put my bags down so you can pick them up. That's about it. Yeah. Walmart and other companies do the same thing. Yeah. All markets are rigged, so you should be in those rigged markets. It's just, MC, you should do my job. This is, you're making my job quite easy. Exactly. It's game on. It's game on when the Fed starts to add it to its balance sheet. Game off till then. Yeah. I mean, we did stop. They had talked about stopping the quantitative tightening. But then as far as like adding things onto the balance sheet, it's a big different story. When that happens, we should be pretty good. Oh my God, Ed Fox is here. Must be a bear market. Ed, I haven't seen you for a while. Maybe it's because of the time frame. It's good to see you. Taking notes. How's all the indicators of when to sell looking? I will indulge this and we will take a look. I'm going to guess that it's pretty awful. But first, take a look at these picture of these beautiful flowers. Doesn't that just calm you down? Ah, very nice flowers. All right, I'm just trying to lighten the mood before we get into this nonsense, which is hold 100%, sell 0%. Look at these. There's nothing that's hit except for Bitcoin dominance is at 91%. What are they? So that means that's almost going to tap out. Interesting. Bitcoin long-term holder supply, short-term holder supply. Anything else big? MVRVZ ratio. Bitcoin bull run index. But nothing is hit. But that's interesting. Bitcoin dominance. What is the Bitcoin dominance? I mean, I've heard of it. I do a show with this guy who talks about it nonstop. Let's break into his website and see what it says. He won't mind. He's probably sleeping. He's over in Bitcoin conference right now. Let's see. In June, Bitcoin was at 65%. Bottom around, oh, it did. It bottomed around 56. Now we're at just under 60. It seems like it's always around 60. So, all right. Yeah. Bitcoin conference Amsterdam. Have fun. Yeah, Keith Jones, Death Cross is playing the T. It's very true. I found this interesting. Look how close we are, that Death Cross. I mean, I can show you. Let me get rid of these golden crosses. Nobody cares about that. Let's see. But yeah, you can see here. It was pretty close. Like in blue is the Bitcoin price. And it actually bottomed a couple of days before at 53,000. And then during the actual death cross, it was 60,000. So pretty close, pretty close. But I mean, no one's going to complain. Then it did touch that again, like just a couple. How long ago was that? Just like 3 weeks later. It's funny. And it hit it pretty well here. Reasonable. 78,000. Remember that in April 2025? It was 78, went down to 76. And now here we are about to do the same stuff again. It's always the same thing. It's always the same thing. Just repeating endlessly, loops. So, where is Ben? Ben is in Amsterdam, having a great time. I told Guy, I said, Guy, we'll do an NFA live if the sentiment's pretty good and the market's recovering. And this morning, or actually last night, I told him, I said, yeah, the market is trash, and the sentiment is trashier than trashiness can absolutely possibly be. So let's not do an NFA live show. We'll just do our regular shows and try to get people over the hump so they don't do something goofy. And here we are. Yeah. Wake me up when Bitcoin is 20K, 200K. Death march to the death cross. No, and remember, like, I do appreciate everybody here. It's because, like, most of you have been with me for a long time, and these things don't really shake you. Remember when, Josh, remember when we hit 100K, and then just like we saw before, we dropped like 25%, and everybody else was freaking out, but except for you guys. You're like, well, that's a good news. I can buy some and pick up for some cheap. And nobody was bent out of shape. It was great. And then, like, as we start to get a little bit hotter and hotter, then I get the more like the tourist people, which I despise. The tourist people who ask me, like, you know, give me the best price prediction. I'm like, you haven't been here for a while, have you? I'll give you one. It's going to suck for you. But then, you know, and then it kind of cools off. And everybody who's been with me for a long time, it's like so refreshing. And it's like, yeah, one more big monstrous dip. And we'll probably go even lower. And no one seems to care. This is great. Man, it's pretty good. Didn't notice from my t-shirt. LAX guys got a good play. Tesla and NVIDIA. Hey, you know what? There was this thing that someone made a reference to me about taking a look at NVIDIA and overlaying that with the Bitcoin price. And we did it look pretty reasonable. That's why I like Ben's site, this thing called Workbench. Here's all my saved charts, like Fartcoin dominance, which, let's see, what is that at? Oh, wow, 0.009. It's just a joke. Let's see. But this one, Bitcoin NVIDIA. Let's get over here. It is interesting how similar it does flow, because NVIDIA is, of course, the AI future, what all chips are built on, right? And Bitcoin is essentially the financial future. And we can see that there was a divergence here in July, got you. But then towards this time frame, past November 2024, it seemed like we followed each other pretty well, except there was a divergence here. Bitcoin price went down, NVIDIA, well, no, it did go down. And look, a little bit of a jump here, and then it goes down. That is amazing. Well, if you want to know what's going on, just take a look at, just overlay NVIDIA and Tesla. Good one, LAX. Thank you. What else we got? There was one. Joel said this in the beginning. I started this. Hey, Rob, I finally caught you live. You can submit. I want to submit some for Q&A. I made 150,000. Wow. On the latest ICP. Wow. Good for you, man. Very, very happy. I don't have any of that, but I used to. What time horizon would you reckon for me to DCA it all into Bitcoin? You know, the safest way, I mean, that's what you want to do. I mean, I can't tell you what to invest into, but you know, one of the safest ways is what I've done before, which is to take a look at, and there's a link in the description. It's called dynamic DCAing. And what I do is, I go to the dashboard, I take a look at the risk levels, and dang, that's right. See, these risk levels around 0.5, I'm just, from like 0.5 to 0.65, I'm just buying like my regular stuff, right? And then when it drops a little bit below, like at 0.45 and below, I double it. So if you're spending like $10 a day, and on anything above like the risk level, which would be a price of 111,000 and above, you just spend that 10 bucks a day. But if it starts to go below 0.47 or 0.45, depending on whatever you want, 0.4, then you start to double, triple, quadruple the amount that you put into Bitcoin. That's how I've done it, and it worked out pretty well, especially in the bear market. And in that video, again, come on. Jeez, I did not want to do that. We're at number 5, dynamic DCAing. I give you examples of how much you would make on lump sum, on regular dollar cost averaging, and dynamic DCAing. And DCAing is especially one of the best. And people would say, what about lump summing? Because that's a pretty good. No, if you lump summed in like since 2021 and you bought it at 67,000, you didn't even 2x at this point today. You're not doing so great. But if you dynamic DCA'd, you're doing pretty good because you would have bought around 17,000, 18,000, 20,000, and you would have done great. So that's what I would recommend. That's it. All right. DeVos says, Rob, keep up with the rainbow chart. I have a limit to how much I can use Ben's site because he gets, no, I don't have a limit. I'm just kidding. No, I can just tell you that I've seen the rainbow chart and we didn't get in the sell zones. Luke Card. I thought the McRib was going to sue us. That is the goofiest thing I heard. But I mean, it's fun. If you don't know, every time McDonald's brings back the McRib, apparently we're supposed to have this big, huge, massive pump for Bitcoin because it happens all the time. But, you know, that's just nonsense. Let's see. And this is where we should leave it. Lone Wolf Monday says, I'm mowing my lawn on Sunday. That's pretty good. I've got some roots to take out myself. So these are the things that we should focus on. Not so much about the market so much, unless you have to take profits, which I highly recommend. Definitely always do that, especially if you debt or you think like, hey, I went a little bit too much over my skis. Maybe I should take some profits out. Definitely do that. It's a lot less stress. And then we go forward. Again, I think we're going to go down even further. Could be wrong. But if we do, we do. We don't, we don't. These are the things that I see. And I'm just going to be here for a long time. Not paying too much attention, just kind of sharing my thoughts with you guys. That's it for today. So look, like today's video, subscribe and like and all that good stuff. I will see you guys Thursday. So I'll see you guys tomorrow. And that's it for this one. Thanks so much.